How to trade cryptocurrency for beginners. I'm going to give you a quick tutorial on how to trade cryptocurrencies for beginners. So no intro, let's dive right into it. Here's what we're going to be covering in this video. We're going to cover which currencies to trade. We're also going to cover how to read and analyze a trading chart. We're going to be covering candles. We're going to be covering simple technical analysis, like how to determine the direction that the market's likely to go. I'll go over market and limit orders. And then at the end, I'm going to show you my two favorite trading strategies for beginners. So let's go ahead and let's dive into it. First things first is you need to get set up on a cryptocurrency trading brokerage. There's a lot of them like Coinbase or like Binance, but the one I like to use in specific is called KuCoin. They offer a lot of really cool features that other brokers don't offer, and their fees are really, really small. So I'll leave a link in the description for KuCoin if you'd like to set up there. If you'd like to set up on Binance or anywhere else, then this video will still be applicable to you because the trading platform is pretty much the exact same thing across these different brokerage platforms. So once you're logged in, you're just going to want to come up here to trade, and you're going to want to click on spot trading. And once you do, a pop-up is going to pop up that looks basically like this. Okay, now when you first open it, it's likely going to look something like this. So let's go into what does this actually mean. So here you can see the different time frames. Okay, so you can see currently we're on the 1 day time frame. That basically means that each one of these little candles represents 1 day. Okay, and if you're to pop down to like the 4-hour time frame, for example, that means each one of these little candles represents 4 hours. You get the idea. The next thing that you're likely going to notice is this order book over here. You don't need to pay attention too much to the order book, especially if you're just starting off. But basically what this means is it's basically the red is the sells and the green is the buy. So this basically means that somebody's going to buy Bitcoin at this price and they're going to buy this much Bitcoin at this specific price. So with that being said, let's go over how do you actually read a chart. So really simply, here's some basics to technical analysis that can help you determine the direction of a trend. So if I come up over here, I can click on the indicators and I can type in moving average, and I can just click on moving average, and I'm going to do that again. So I have two moving averages. I'm going to have a fast and a slow. So let me explain what to do. I'm going to go in here to the settings, and I'm just going to make this a little bit bigger so that way we can see it. And then for the input, I'm going to put this to 21. Okay, so this is going to be my fast moving average. And then I'm also going to make my slow moving average 100, and I'm going to make it bigger like this. And I'll also change the color so it's a little bit easier to see like so. Okay, so now I have these two moving averages. The blue one is the fast one, which basically means it's going to be closer to the closing price. And then the red one, which is my slow moving average, which is going to be smoother. Basically, a simple way to determine the trend is when these two moving averages cross. So for example, if this fast one is above the slow one, we can tell that we're in an upward trend, as you can see. And then you can see when there's a cross and the fast one comes below the slow one, then we're in a downward trend. So this is an easy way that you can determine the market bias. Now, one other indicator that you may want to pop on is something like an RSI. This is a stochastic RSI, it happens to be, but any RSI will do. This is something called an oscillator, and this can basically tell you when a cryptocurrency is overbought or oversold. So for example, if it crosses above where this 80 line is right here, you can see it's a scale from 0 down here at the bottom all the way up to 100. The closer it is, if it's over 80, this is considered overbought, which means that price is likely to fall down. If it's down below here, this means that it's oversold, which means you should likely be looking for buying opportunities. So you can use these two in conjunction to get good entries into the market. Now, this is a very, very simplistic strategy. I'll include my two favorite beginner strategies here at the end of this video, but basically we just want to trade in the direction of the trend. And then also we want to wait for it to come out and be oversold. And then as soon as it comes back in the zone, this is a time that we'd like to buy. Okay. Another example, it's come out of this zone, meaning it's oversold. Then once it comes back in, we'd buy like right here. And you can see you can catch these nice moves just with that basic strategy. Now, as far as actually placing your order, here's a couple ways that you can do it. There's what's called a market order and there's what's called a limit order. A market order basically means that you're just going to get in the market right away. Okay, so you can simply say that you'd like to get in, say 1,000, for example, USDT. You'd like to buy 1,000 USDT worth of Bitcoin, and you can buy it right there and you'll just get in right at whatever the best price is right there. Now, the other way, which is more popular, is to actually do a limit order. And essentially what a limit order is you can say at whatever price that you'd like to get in at. So if you see price price is currently 39,660. You could go in and you could put in 39,500, and you could say the amount of BTC that you'd like to buy at this point. And essentially, once price comes down to 39,500, that's when you'll actually enter your order. So these are the two different types of market orders here. Now, the last thing that I'll cover here before getting into the two best beginner trading strategies is I'll actually get into explaining to you what this means up here. So you can see this is a cryptocurrency pair, meaning it says Bitcoin USDT. USDT is what's called Tether. It's tied basically 1-to-1 to the US dollar. So you can think of this as just US dollar. So the first one is Bitcoin. The second one is US dollar. So we're basically, when we're buying BTC USD, we're assuming that Bitcoin is going to go up in relative price to the US dollar. If we were selling it, then we would think that USDT is going to become more valuable in comparison to Bitcoin. Now, with that being said, this was a very basic video of how to trade on the KuCoin trading platform or any other cryptocurrency trading platform. If you'd like to know our two best trading strategies, then I'll include a video right here that includes our two best cryptocurrency trading strategies for beginners that actually work, that are actually proven, and we'll show you the data in that video to back it up. So go ahead and watch that video right now.